topic is called Financing the New Normal. And our guest speakers today are Renee Short and Anthony Nicholas, both loan officers with Hudson United. Anthony, Renee, you guys here? What we wanted to do today was kind of offer everyone an opportunity, kind of talk a little bit about what's going on really with mortgages. Because we know right now with everything going on that the industry has changed a lot. I wanted to give you guys just a quick second to introduce yourself. And then we've got some questions that have kind of been generic that have come up several times over the last couple of weeks that I want to throw out to you guys. So do you guys just want to introduce yourself and tell us a little bit about yourself?
Hi, Renee Short. Been with Hudson United now for 10 years. Just kind of running strong, knowing a lot of you guys throughout the years, and enjoy being on the panel.
Awesome. Anthony?
What's up, guys? Thank you all. How many people we got on here? 64, I see. Wow, that's amazing. Thank you so much for your time this afternoon. I'm Anthony. For those of you that don't know me, been with Hudson for almost exactly 2 years. So Renee is definitely the senior here. I look to Renee for advice. I looked to her for advice when I came over here. She's a amazing loan officer. And, you know, thanks.
Thanks for the plug.
And what's up?
I said, thanks for the plug.
Oh, don't worry about it. Don't worry about it. There's plenty more honor to come for you. So thanks to her and Dan, they've made my transition here really smooth, and we have been able to just absolutely dominate for the last 2 years, and we're growing like wild right now, and it is all thanks to our amazing realtor partners to start with. So thank you all so much. I know it has not been easy, especially these last few months, but that's okay. You're allowed to have, you know, we're all going to have a couple of bad months. I remember last year, the first quarter was epically bad, and I still was able to come out and I had my best year ever. So I know that is, you know, as long as we all are doing the work, now is not the time to be sitting around gardening. We are reopening. So I know as long as we're doing the work and talking to our clients, you guys as real estate agents really are you know, kind of the spokespeople for the community, especially the real estate community. I'm so proud of our mortgage company, our real estate company, our title company, insurance, everybody here. So this is going to be a really positive, uplifting call because we have great news. Things are loosening up. We just got, you know, some overlays removed last week. We got a brand new program with interest rates down to 2.5%. This week they removed the overlays for cash out refinances, both conventional government, forbearance. We got some more information on. So we have a lot of stuff to share today. And Adam, take it away, man.
Yeah, so let's jump right in there with one of those things, which is that, I mean, you know, it sounds like business is still moving. So, I mean, how have you guys seen the change in business over the last 2 months? You know, again, Anthony, you're working in New Jersey where the showing restrictions have been different. Renee, you're up in New York. What have you guys been, I mean, you guys been busy? Have there been mortgages being written? Renee, let's start with you.
So I'm going to say 110% for many different reasons. I think you guys are out there. I think as far as agents, you guys are hustlers. You guys are bringing in the business. You're getting out there in front of your clients. I feel that if you're still out there and you're trying and you're working those leads, if they're internet leads, getting on the Zooms, the deals are coming in. I mean, I am still working my 10 plus hours a day, just in a different area. And I will wake up and go to sleep with my family just feeding me I get better service here, that's for sure. I get better meals. But at the end of the day, yes, things are growing. The applications are coming in on the purchases. I mean, we talked about the refinances. Yes, that is making the banks a little bit busier and holding up pipelines. I mean, it's really the flow of interest rates dropping even on those 30-year fixed is really just clogging up the pipeline, which is wonderful. But the purchases, you know, what's nice about working with us is we get to decide which lenders we're using, if they're heavy here, if they're not heavy over here. We move around based on what we have to do for the client. If it needs to close in 7 days, we'll find a way. We just had a deal got clear to close from start to finish. I'm not kidding. Anthony, you know this, right? 5 days from start to finish. And I have the certificate to show. But some deals are harder than others, but they are moving. And what's great is we have a whole variety of different lenders that we can work with, even when the flow is moving.
So Renee, let me ask you this. It's that, before everything started, how were you interacting with the clients? How has that changed? You said you're working at home and having service at home and food brought to you is a wonderful thing. But how has the business flow actually changed with how you're connecting to the clients?
So this is really great for me because I love, if any of you know, and they all yell at me for doing it, but I am the person that will meet my clients in a conference room and we'll sit and talk for an hour and a half from the beginning to the end of the process. We do wants, we do needs, we figure out budget, we work through their bank account, figure out how we can find money. There's so many things that I do one-on-one with, everybody knows my yellow notepad and my notes. All my clients walk away with my yellow notepad and notes when they come meet with me, as far as doing first-time homebuyer work or somebody that just lost somebody and didn't know how to work their finances, and they come to me to work those out for them. So for me, I'm doing a lot of those Zoom meetings. I'm sharing my screen. We're going over numbers together, and it's amazing. I have nurses that are behind, their counter at work, fully geared and watching, and we're going through numbers and loan estimates on Zoom. So it's amazing how many people we can see face to face. And for me, I love being in front of my clients. And I always use this as an example. If you guys had to go on a listing presentation over the phone, how hard is it to get that house? So when we're in front of our clients, this is new to me and I'm loving it. I really do enjoy doing this, and I would love to do 20 a day. It would be wonderful.
Anthony, kind of same question. What practices, have changed for you since everything started?
It's funny because I've been saying Zoom and Hangouts were a really efficient way to do business for like a year. And to take a positive out of all this, everybody knows what Zoom is now. Their stock price is at like $250. Everybody's familiar with Google Hangouts, has the Meetup apps. They jump on Zoom, and it's so much easier now. So for us as salespeople, like, how do you sell when you can't get face to face, right? Like, I like to sell, like Renee said, like, well, most of you, I would imagine, need to be face to face to sell a house or to sell a mortgage, big high ticket sales items. Well, now you have Zoom, Google Hangouts, which presents so much efficiency as far as being able to really have no excuse to not at least virtually meet your clients face to face a couple of times throughout the transaction. So I've been tracking that. I track every single lead that we get, every lead that turns into a pre-approval, that turns into a closed deal. And telephone applications usually convert around 60% to pre-approval. Those, when you add in the Zoom feature, are converting at about 75%. So that's a 15% increase from what we would normally be doing. Now, I will also say, I believe that in the beginning of all this, a lot of the bigger banks really pulled out of mortgages. There was far less competition, it felt like, for a month or so there, Renee. I don't know if you would agree with that or not. Now you're starting to see a lot of the bigger guys, the online shops back in the game. So we are competing a lot more. That's something I want to touch on, Adam, is ways to talk to your buyers about getting a second look or having another set of eyes to review the pre-approval, the loan terms, the estimate that you received from whatever other online lender or somebody who is not a local reliable mortgage broker or banker. That is so important. Most of you guys on this call know that. If I can, if you would allow me, I'd love to share some scripts that some of my agents have told me they use and find really successful in getting those buyers over to us.
What are you guys seeing with pre-approvals that were written at the beginning of the lockdown in early March? Are you seeing that the pre-approvals still have some validity to them, or are you seeing that people's financial changes have changed so much that it really, you can't, like, if it's not 48 hours old, it's dangerous?
Well, I'll grab this, Renee. We jumped in like day one of all this and identified our business owners, our commissioned employees, and figured out right away who was going to be impacted. Obviously, we've been dealing with it. That, for the most part, knock on wood, seems to be over. But that being said, when the leads are coming in, Adam, what we're doing is, we're having that. Lead is the name of the game, so we call everybody within a half an hour of receiving the lead, an hour at most, just to, if it's nothing else, make the introduction, honor our referral source, honor our real estate agents, try and build some trust up right out of the gates. You guys just told them about us. We want to, capitalize on that and really triangle in the trust level up front. If we can get their application on the first call, we're taking it, no questions asked. Then that second meeting, which we always set our second appointment at that initial application, okay? That's really important. Setting your second appointment up is crucial to converting more leads, okay? So when we set that second appointment up, we really push for Zoom or Google Hangouts.
Renee?
I'm going to jump in and I'm going to go back to that pre-approval in regards to the beginning of the process and how this should all work in the world of new Zooming. I mean, I think why you work with us, I got to be honest, and I've said this my whole life. I've been doing mortgages for 27 years and I've always been a broker and I've never worked at a bank. What does that mean? In my brain, I've known 10 different lenders all at once, all their guidelines, all their different material, who's on first, right? I mean, that's what it's called, who's on first. In our world, that's what's awesome about not working with the just straight to Chase or the straight to Wells is every day I will tell you our pipeline moves around on who's on first, right? Who's coming out with the better deal, who's giving concessions, who's waiving appraisals. There's reasons why we deal with all the different lenders that we have, including our own banker. So for me, that's really the importance of the pre-approval and getting that second look, because what you get at one bank, just because they're saying yes or they say no, or it has to be this or it has to be that. Listen, go to one bank, you're only going to get one brain that thinks inside one box. We're looking at multiple boxes, and that's what makes us smarter, Anthony. Being a broker makes us smarter because we can do it all. We can bring these deals that people got, fell apart at Bank of America or fell apart here. We are saving them. And we talked about this earlier about saving these deals that have fallen apart. There should not be a deal in anybody's office that does go bad in a contract without a manager forcing and getting that second look with us, because there are so many deals that we could probably save that nobody just wants to put in the extra time. And that's what we're here for.
I can listen to Renee talk about mortgages all day. I want to throw in that I think we coined the term requal, right? So when you have a buyer who hasn't talked to their mortgage lender in 30 days, we want to requal them. We want to reapprove them and make sure that, we have the most up-to-date information. So to protect your transactions, protect your, listings, getting a lot of listing agents that are calling me up and asking me, hey, how can we get this buyer over to you, right? I tried to
offer a different way of perspective of maybe they're being told they can only get a conventional deal. And you know what? That bank's not doing FHA anymore. And they convince the client that, FHA is not in their cards. Well, that's not true. I mean, I have a client that just landed on my desk this morning. The bank doesn't do 203Ks. Well, they've been working with their mortgage guy for 6 months. Now the deal's here and he can't do it. So we're getting the deal. They just need to know that we have so many products. If the other banks say no, we're saying yes. And that's really what I hold true to being a broker.
You know what, guys, I want to ask a question because, Renee, you were just talking about the fact that, each bank only has one product. And that was one of the things, when I first came and started working with Rand and then started working with Hudson United, that I totally love the fact that Hudson United had, and I want to say at the time, it was like 34 different banks, some of them that I never heard of before, but they were able to get me better rates than what I was able to get over Wells Fargo, because Wells Fargo only has the one thing. And right. Anthony, you were telling me yesterday, and I want to bring it up because you sent me that chart, the difference of what that rate really does in your buying power. So I'm going to bring up that chart, but maybe you can kind of explain to everybody why the value of using Hudson United and making sure that your buyers are being qualified by a broker and that they may not be getting the best deal is going on. So let me bring the chart back up, and then maybe you could explain this to everybody.
Okay.
All right. I think we see this chart. It's very colorful. What am I seeing here?
So prepared for, well, I can't catch the whole thing, so I actually brought it all the way to 4 3/8 because last year at this time, that was a good rate, believe it or not. Rates didn't really start to drop last year until like July. So right now, I mean, I have deals that we're locking in at 2.875, 2.99. We have rates down at 2.5%. It is a little bit more expensive today than it's been in our area for as long as I've been doing this, where it really is very beneficial to the client to pay a discount fee to lower their rate. The spreads, when I say spreads, I mean the difference between 3% to 3.75%. As you can see on a $500,000 mortgage, that's a $207 difference from 3% to 3.75%. And you know, when you're saving that kind of money, any costs you lay out up front, you recapture really quickly. So we are selling a lot of these loans right now with some discounted points to lower the rate even further than what you see here. But just so you can really explain to your clients how important it is to understand interest and these low rates. If you were qualified 3 months ago, pre-COVID, and you had a great rate then of 4%, but now your interest rate is down to 3%, you're saving $287. By using this math right here, $10,000 equals $45 per month. Right there, you just increased your sales price by $45,000, $50,000 in 3 months from the market improving. So that means you can now afford that next price range. You can afford to be in the neighborhood you really want to be in because the higher taxes are offset with the lower rates. So understanding this, and this is something that we do with all of our clients to try and eliminate the interest rate objection up front. We want to explain how it all works and help them to understand what's going to put them in the best spot to reach their goals, so that it really, you know, right now we have the best rates. We don't always have the best rates. I don't like to sell on interest rates because I feel like, you know, rates change every day. So you need to have a little bit of luck in terms of when you get contracts, et cetera, et cetera. So we want to focus on making sure that we hit monthly payment goals and cash to close goals, right? The two big checks, the check you're going to write every month, the check that you're going to write at closing for your initial investment. So those are what we focus on. And with rates like this, it makes it very, very easy. It's going to get interesting over the next couple of months, guys. Things are starting to open back up, and you are going to be absolutely inundated with buyers. Now,
Anthony, before you go on, because I don't want you to, you know, I was taking a look at this chart and I kind of marked it up here a little bit. And I really think that this is key to look here. I mean, the difference between that 3 and 3 1/4 is $20,000. I mean, you know, that's the equivalent of payment, you know, 2276 and 2263. I mean, it's the difference of, you know, $13, but that's the difference of $20,000 in getting,
mortgage.
you know, and $20,000 in price. And, you know, you go up a half a point, you know, you're now talking almost $40,000. I mean, could there be a difference of a quarter of a point just between two banks that we represent?
Yes.
yes.
100%. I mean, we have lenders, you know, and I keep saying who's on first. I mean, from this week to next, the top 3 are always changing. So yeah, I mean, there could be a spread of 1 point from one lender to another that we're using this week compared to next week. Anthony, I'm sure you see it as well. We have a certain software. So I would love to say we have all this time to look at all the different rate sheets of all the different banks that we deal with, but we do have a software that all of our rate sheets of the different lenders that we work with go into a software. So we do have some cheat sheets. So I could wake up every morning, come up with some scenarios, throw it into the computer. I know where I'm going that day. I know where we're locking in. I know where we're, you know what I'm saying? I can watch on a daily basis from one lender to another because we have a software that we work with, which is wonderful. And just to piggyback on what Anthony's saying as far as the interest rates, I mean, I'm going to tell you guys, if you're sitting back and don't know where to find your buyers, the first thing I'm going to tell you to look for is go into those renters from last year. I mean, if they went into a rental last year because they needed to only afford that $300,000 house, well, now they can go into that next level of 350 or maybe even 375 based on where rates are. So that's where you're going to take and find new buyers, is go to that rental pool that couldn't afford 300, so they decided to stay low. Now with these rates, you have more buying power and now maybe can buy in the certain county that you wanted. So that's how I would find those buyers due to the rate drop.
That's going to give me a great segue here because, one of the questions that did come up, that's come up a few times, and you guys can kind of hit on here, is, we do have in parts of New York where they said that, landlords couldn't evict. So some tenants who were found a little bit tight with their wallets had skipped some months. We've got the same thing with some sellers who, had mortgages who are possibly looking to sell and may have kind of gone into a forbearance. How is that shaping up to impact the mortgages going forward if I'm not selling today or I'm not buying today, but I am thinking about doing it, in the fall once the world really is opened up? How are those forbearances and those deferred, payments going to impact me as a buyer? And what, as an agent, should I be telling my clients about those type of questions?
So I'm going to ask if I can talk about this one, because I've been a huge advocate about the not, going into forbearance and all this stuff and how it's going to affect us, you and as agents, and the future of the client. So there is perfectly simple steps to this that if you are in forbearance, it will show up on your credit report. So technically there's no hiding it, right? It's not going to hurt your score, but the word will be there. To now fast forward, and the one thing I always talked about is I'm worried about, hold on, I can't. I'm worried about people not being able to play catch up after those 3 months when they demanded it the 4 months. Now we're looking at, they'll be able to stretch it out. And at the end, if you really can't pay it, then they'll do a modification for you. So there are all ways now that's really nice that we're coming out to protect the client and the consumer, which is really important. Outside of that, if you have, let's say you were out of work for 3 months, now you're back and that money's back in your pocket and you can pay back the forbearance. So it will not technically affect you at all with the sale to buy another home or to even refinance, but you do have to make sure you are back to work, and you do have to make sure that your forbearance is caught up, and you do have to show proof that you're no longer in forbearance to be able to refinance or buy another house.
Renee, what is forbearance? Because I think there's a big misconception, and I think it really should be clarified. And then Anthony, please, I want to hear your point on it.
Forbearance, listen, is the big word that everyone it's just putting it on pause, okay? It's not forgiveness. It doesn't mean it's not going to be due at some point. It's not tacked on to the end. It just means until you guys come to an agreement of when it will be paid in full. Like I said, that they will drag it out, but then it will be modified. And then at that point, that's where they'd actually put it on the tail end. So forbearance just means they're holding it, not making payments until you do play catch up, but that's only going to be allowed for a certain amount of time. And then from there, you would actually have to do a loan modification with your actual mortgage filing documents to actually put the amount owed on the tail end of the loan.
With regard to forbearance, what I understand is that there are currently a lot of people who did enter into a forbearance that have the money. The consumers are what drove this economy, guys. Do not fool yourselves. There is nothing else than consumer-driven, economic success over the last 2 to 3 years. That still seems to be the case, and we'll really see for sure, but I am not too worried about this situation. Now, for people that have entered into forbearance, if they are making payments of any nature, then they're good to go, okay? If they have stopped making payments, which out of the customers that I've talked to, majority have stopped making payments. If you've stopped making payments, if you've missed a payment, you must get current. And then depending on the lender, depending on who owns the loan, you have to show 3 to 6 on-time payments before you can qualify for a new mortgage, whether that's a refinance or a purchase. So guys, just because, and this stuff changes, guy, every single day, every day. Renee probably, didn't check this morning, and I saw, some banks pushed it out to 6 months. Yesterday it was 3 months. So, we're on top of this stuff. The best advice I could give you is if you're unsure, say, hey, I don't know, but I have a great resource my company provides. Let me reach out and I'll get right back to you with some really good information, and we can.
Also looking at that group chat on the side. So whoever's asking, I can't read that far, but yes, I do say pay your escrow during your time of forbearance. Just want to throw that in there before we forgot.
We always talk about affordability rates. What do you guys see with regards to the rates? What's kind of the forecast, coming out of this? I remember it was maybe a year ago, sitting around, and it's like, yep, the rates are going to hit 6%. And we're like, oh my God, it's going to hit 6%. And we were panicking, forgetting that rates had been 8, 9, 10%, even 18% at some point. Right now, it looks like rates are, around 3%, 3.25%, 3.5%. What do you guys see theoretically over the next 6 months?
Well, it's an election year. We have, the recovery, the reopening of the country right now. I don't see any indication, any reason why rates would be going anywhere before the election. Most of the experts that I listen to are predicting into the end of fourth quarter, beginning of 2021. As an arbitrary date, I would say February. I would say February 2021, we start to see rates coming up. But for the next 8 months, you are going to be in a amazing marketplace. Obviously, we need to get listings and we need inventory. But that said, there's going to be a lot of buyers out there, and the ones who are able to purchase are going to look back in 5 and 10 years, and they are going to realize what an amazing deal that they got. So I'm very bullish on rates staying low, definitely through the election. I think into the beginning of 2021. If I knew for sure I wouldn't be here, I'd be on a beach somewhere, right? But that's what most of the smart people that I know and listen to and trust are telling me.
2.0, 1.99 coming down.
Are we like the luckiest industry in America though? Because seriously, like Adam was saying, we all thought rates were going up to 5-6% last year. I know I did. They were, in fact, at the end of 2018 at 5%. So look at where we are now. Like I said earlier, it's expected that, things happen. We're going to have a couple of bad months. But, right now, get ready to rock and hit the ground running. Adam, I'm going to hand it back to you.
Yeah, no, sure. Other things that always come up that trip up the mortgage process when we're getting through, we deal with things, it's always part of the contract. We got to get a contract. That we get our mortgage. For our mortgage to be cleared to close, they have to go through an appraisal process. Are you guys hearing anything about appraisals being delayed, not coming in right, with there not being volume? What are you hearing with that, since we know that we've actually had declines in sales, so that the comp picture isn't what it used to be?
So I'm going to tell you right now, I'm not finding any issues with values on any of our appraisals that are coming in. I do feel if you're working local with your appraisers and the communication is there up front, listen, they leave you enough rope to hang yourself. What does that mean? When we order an appraisal, these appraisers don't go in blind. We get to show them the contract. So, as much as it's a third party opinion of value, we do get to steer the boat a little bit with the showing them the contract. So they do know our target date. A lot of times we do want to keep these appraisers local, because a lot of people are not wanting to have, sellers are not allowing or doesn't feel comfortable in having anybody in their home right now, new babies, whatever it may be, which is fine. We're getting that, they just tell us that. We're doing a lot of drive-bys, which is great for a lot of these clients that are more in that higher end. And I say the clientele that you take risk. take the risk out of the deal, the looser the bank is going to be. So for me, you know, you put 20% down, we're finding that we're having waiver of appraisals, right? So we're not only saving a client $500 because now they don't have to pay for the appraisal, because we are getting appraisal waivers on those clientele that has that 700 credit score and has, you know, 10, 20% down. So we're saving the money, not having to do an appraisal, not stressing anybody out, having to go into a home. And I feel that our appraisers that we have on the wheels of the different lenders that we do, the great thing is we do get to create the people that are on our wheel, and we do get to update it. So if we have someone on our wheel and we find the trend is not working for us, well, we can find a new appraiser on that wheel. So that's what's really great, is we don't always get to control the bus, but we do get to drive it a little bit when it comes to the appraisals.
I mean, I had 16 closings this month. I had one appraisal issue on a VA loan that went over asking price. I would say this month, probably 50% of my deals went into multiple offer or bidding war situations. And so far on the new contracts, I think it's closer to 70%. So it's definitely going to be something that we will have to deal with and contend with. And Renee, what I would say too is one of the things coming from my experience in banking, when I joined Hudson, one of the critical reasons for me to come here at that time when they had just got into banking was to be able to have my own list of appraisers. And this is on Facebook Live, so I'm going to leave it at that. But if anybody has any concerns or questions or wants to talk to me offline about, you know, what we're doing to kind of protect our transactions, I'd be happy to share that.
The banks have been ahead of the real estate, actually, when it comes to the digital part of the transaction. Right now, how much of the mortgage transaction is hands-free and digital? What hand-to-hand contact is needed versus what can my clients do and pretty much see you in a screen?
What I'm doing right now, I listen, we have to work with the clients, right? So we have a lot of clients that are very digital and they're able to upload their documents and do everything very easily and securely. There are other clientele that, what's nice about, I live in and work within the county I do a lot of my business in. So there are a lot of people that do have my home address right now that have been dropping documents off in my mailbox as we wave. So that's really what I'm doing to move the paper, is we're kind of taking it any way we can. Christopher does go to the office, which is nice, Christopher Rand. So if my clients are mailing physical postal mail, some do that as well. We are getting all documents all different ways.
And again, for me, there's so many different ways to skin a cat, but there are a lot of benefits to being paperless and to having automated verifications and electronic signatures and disclosures. So a lot of the things that I have been trying to put into motion with agents, with buyers, is due to COVID-19 is being forced into motion. So we can automatically click a button, verify employment. We can click a button, verify assets. We send all of our disclosures are done electronically. How, our technology, guys, I promise you, is on par with Quicken Loans, with Loan Depot. Our back-end website application is live, meaning that the same, if you or a client is filling out an application online and you're stuck, we can Zoom, we can have a phone call, I can hop in and fix it or help you and walk through the application. So our technology is so on point. I don't think there was another industry as prepared for the work from home as we have been. So, and I think that was really demonstrated in March and early April with our seamless ability to keep deals moving, keep the pipeline flowing full, and closing those loans.
All right. Well, that's great to know. I'm ecstatic, and it's one of those things that we're very fortunate with. At Hudson United Mortgage, Title, and Insurance, all three branches of Hudson United were seamlessly able to roll into this and keep the pipelines as open as possible. So for that, I know that everyone is very appreciative. We had a couple of questions that have popped up in the chat, and then there was, I think, if Deb Clark is still on here, I want to, she was kind of chiming in a little bit before. She wanted to tell us a story about something that happened up at her office. But before we get to Deb, let me just throw one of these questions out there. You may or may not know this one because it's very specific. Do you guys know how much higher the rates are on a 3-family mixed-use property is compared to, the standard 30-year FA, 30-year loan?
Who asked that question?
I'm gonna plead the fifth on that one. I'm just
Renee,
All right, so
3-unit mixed use?
there's no rate
Anybody
that you
doing
can
those?
just throw out there. Your mixed use all depends on your percentage of misuse to residential. We really look at more of the residential if you're looking for the true commercial type of loans. We do have guys in the company. I'm not one of them. Anthony, I don't know if you dip into that commercial market. That market's way too long for me. My brain doesn't stay still long enough to deal with one commercial deal.
Yeah, no, an investment property. So, okay, let's rule out a couple of things too, because the programs, the clients that are going to be affected the longest and the worst are always, for as long as I've been doing this, self-employed and investors. So if you're in those categories, you are still kind of on the sidelines. Not everyone, but generally speaking, that's going to be the last to come back.
all right, awesome. And here's another one, and I want to say, I think Renee, you may have touched this when we first started off. Time to close. With what's going on, and
Yay!
I think you said we had one done in 22 minutes.
Pretty much. So listen, guys, again, can we make it happen fast? Yes. Can we make it all go digital? Yes. But time is money, right? So those guys that are a little faster, you may pay a little bit more money to use them because compared to somebody else that may not be as busy and the rates are a little bit better because, they don't work as fast as others. So we have all different types of lenders out there. So, and I'm just saying this is a lot of you on there, a lot of you that I'm doing loans for. And if we're sitting in that bucket for 45 days, I don't want you sitting here saying, well, you called, I'm going to get a million texts at the end. Why aren't I closed in 9 days? So yes, that does happen. We do have these deals from start to finish that we can make happen in 5 days, in 9 days. But naturally, a purchase should take us right now, even in today's market, 30 to 45 days.
So then here's probably the better phrase question. What advice as an agent can I provide my client to help accelerate the closing? What are the things that I should be doing now to make sure that I have as quick and smooth of a closing as possible?
Go for it, Anthony.
Sure. So I want to take one step back and answer your original question and tell you that we're 24 hours for everything. So if you have a pre-approval, 24 hours, a new loan approval, 24 hours, appraisal review, 24 hours. We are keeping our purchases prioritized, guys. Your business is the business that we love. That is why Renee and I work here, are for our agent partners and our purchase loans. So we're keeping our priority on our purchases. Now, I can give you a lot of things to do, not to do, that will screw your loan up and that will prevent you from closing. As far as the things that you can do to expedite closings, get your contract signed as soon as possible. Get your down payment if it's in New York and you have to write earnest money. Get your down payment in with the contract as soon as possible. Drop it off. Last night, I had a client go in, sign a contract at 8 o'clock at night. Attorney dropped the contract off with the check at the agent's house last night, and they're delivering it to the sellers this morning. So whatever it takes, we want to just deliver wow service, and that will protect the transactions and speed them up. And Mike Adams is on here. He might be able to drop some advice on some things that he might be seeing from his end that could speed things up. Our mortgage is we're running really fast right now, so it's not us that's holding you up. I promise.
Right.
That's awesome. And Mike, if you want to unmute and throw in any words of wisdom on what could help them accelerate on the side of title, just because the question was here, I always love hearing from you.
Yeah, no, I know that. Thank you so much, Renee, and it's really going well, Anthony. I appreciate all the good words. And what we've been selling to the attorneys and to the clients and to the agents is that, if they're able to provide back title, that's really helping us to move so much quicker. You know, we're kind of hamstrung with certain municipalities, with certain you know, clerk's offices. So if you know, sellers are able to provide the back title, we can go to our underwriters and they're willing to work with us. You know, everyone's really been accommodative, you know, under the last 2.5 months. So that's really the biggest, you know, help to us is if sellers are providing back title, we're able to really kind of move quickly, you know, a few weeks getting everything done. You know,
And agents, these guys are the best. You should not trust anybody else with your closings right now. I've had Mike and his team in New Jersey, Trish and Luann and their team have moved mountains and made miracles happen to protect the integrity of closings. You know, taxes you know, with everything that's going on right now, you really need to work together as a team. I've always believed that. Being here, I know that is true.
I will tell you the one thing working with title and insurance is they're always answering the phone, which is just great. I mean, there's sometimes I have agents calling and asking questions, especially some of you just starting out and you're stuck with a question. I mean, I tell them, Mike, you know, I send people over to you all the time. Just throw it on Mike's desk, give him something to do. So, you know, that's really used us as your tool, especially when you have to pass on that information. What makes someone great at their customer service is finding the facts instead of, you know, rushing to jump in and just say, oh yeah, this is how you do it. Go straight to one of the professionals because we're all here for all of you.
And can I add one other thing in about, you know, trying to protect your transactions and making sure that we're moving through quickly. And one of the things, guys, is, you know, and I know how it goes, especially now you don't want to turn off any buyers, you know, leads are gold. I get it. But when you're out working and hustling and, you know, spending time and energy and you have buyers that aren't pre-qualified or pre-approved, or, you know, they have something from 6 months ago, you're not doing yourselves any favors. I would really, and a lot of my agents are taking a stand and doing this better than ever, which I love and appreciate, but just demanding that, you know, you need to follow the process. You need to talk to my guy. You need to get pre-approved. You don't have to use him, but you need to speak with him and get me a letter. Otherwise, you know, we're not even going to be able to schedule a showing or, you know, whatever the situation is. So getting that pre-approval done up front, right away. And then now more than ever, having a really dialed in and caring follow-up system. So I can go into what we do on a different call. But that I feel like is more important than ever to really, you know, separate yourselves from the competition with buyers and sellers for that matter. And then, you know, what we see the most, and I'm generalizing, but I'm sure this is true for Renee too. What we see the most is Quicken, USAA, some of these bigger banks, they are not familiar with our area. They do not understand property taxes in our area to the expense that they are, and they constantly misquote, incorrectly pre-approve clients. Listen, I'm not saying they don't have really good salespeople there, because they do. They're like little ninjas at Quicken. That's what I picture in my head, because they are dominating that space right now. That doesn't mean that they are doing the right by their customer. I've never met a customer that's started to get a pre-approval with Quicken that's ever actually seen an estimate and had an idea of what their closing costs were going to be, which blows my mind in this area or anywhere really. So just be conscious that if they're pre-approved somewhere else, there's a lot of factors that will change that if they were not properly pre-approved. Monthly payment, cash to close, seller's concessions, a couple of other additional things that we've come across recently that have completely changed pre-approvals for agents who thought that they were showing their clients in the right price range, got real approval, and then had to, completely readjust, which ultimately, does earn more trust for you as the agent and for us as the lender with your buyers, because we do, walk them through why it is this way, and they typically will agree with us.
I want to jump in here if you don't mind. One of the things, and the reason I'm talking to all of you guys as Rand, right? I mean, we have built a really strong company here, and what I've built for all of us here at Hudson United is we all have we want the trust, and the trust is the whole thing. And at the end of the day, I'm not sitting here working every different angle of different counties. And I really feel that in these tough times that we're fighting over deals and you have your buyers, our goal is that your deals are getting accepted because our name is on those pre-approvals. And that's really what I want to hear. I want to know we're going to get you to the closing table. There's confidence out there that if you have the confidence, your clients are going to have the confidence, and you're going to put that out there for all the other agents and all the homeowners out there, that it's the confidence that if we put deals together, we're getting to the closing table. And I think that's the first part of this whole transaction, because at the end of the day, no one, you all have been there. Deals are up, deals are down, deals are sideways, deals like 1 minute on, there's so many different reasons why deals could hit, I call them hiccups. The goal is that you have our brain capacity of what we keep these deals together for you. I mean, I'd rather listen to you guys every day and help you guys build your business, and know that when you hand over our pre-approval from Hudson United with Anthony's name, my name, that you're getting that, hey, this was $5,000 less, but we have the confidence that you guys are going to get to the closing table and this deal is going to close in a timely fashion. And that's really what we present. Not saying that everything is perfect, because expectation is all about customer service, is the expectation of getting a mortgage. But at the end of the day, when we get there, it's not for us necessarily, it's to make you guys happy. And I love when you guys get those closings and you guys are just building, that helps us grow our business. So thank you.
And I think that's a great way to kind of wrap up. I mean, guys, I can't thank you guys enough for your timing, your input today. I'm going to give you a second just to kind of give any other final thoughts that you have. Everyone who's on the call, I had to throw the poll back up there. Just again, if you haven't checked in, please mark off the poll and read your run just so we can track it down. And then final thoughts, Anthony, Renee, and then Danny. I mean, I'll let you have the last word. Anthony, I'll let you go first.
Cool. Thank you again. I love all my realtors who have been out there when it's been super weird and scary times, but are working their butts off to pull us through this, pandemic. And I promise all those seeds that we've been planting are going to bear fruit. We are going to have an amazing second half of this year. Can't wait to get it going with you guys. Thank you so much for your time today. It's been my pleasure.
Absolutely. Renee?
Guys, the same thing. I'm so excited to see all of you, and I want to do more of these. So if you guys ever have anything that you want to do smaller or bigger, I'd be happy to join in.
Yeah, well, I just want to thank everybody. Thank you, Adam. Thank you, Renee and Anthony, for putting on a great show here and for all of their support out there. We're going to keep these coming.